Hi, this is Steve Schwartz with the RQ TradeLAB review for the day of October 29th, 2013. I am here with my colleague, partner, friend, Edward Preston. He's going to give you a top-down assessment of how the morning looked and what we could potentially be looking for the remainder of the day. EP, why don't you take it over right now?
All right, thanks, Steve. All right, guys, so we had a lot of sentiment changes today. You can see the sentiment changes with the numbers that I've painted on the screen here. We started off today in conflict. We had the S&P clearly up into the bull zone, testing resistance. Treasuries on the right side chart here. At that point in time, I'll put the white line up here that designates the 8 o'clock start time for our lab. We were also in conflict, or rather also in the bull territory with the Treasury. So, you know, when both of the benchmarks are on the same side of the fence, we call that conflict. That means that we really shouldn't be looking to jump into any financial market until we've got them in sync, having them on opposite sides of the fence. Well, that took place. Here you can see the notes crawling down at, this is after the core, what do we have, the CPI number that came in earlier this morning. And when that happened, you can see the stock staying up. Well, we're shortly lived. The Treasuries dipped into the bear, went back into the middle, back into the bear, back into the middle, and now, as you see, we've kind of broken outside of this box that we've had as I drew up from 9:30 when the stock market opened up. That's a good thing. Really like that, but the problem is, look where the stock market is. Stock market's staying up. It's not collapsing. So anybody that's traded any stocks looking for a trend, it's been very, very short-lived, very, very small range. In fact, the range in the S&P today, since 9:30, it's been about 4 or 5 points. That's well below average. So it's been a struggle. So let me go over to the stock screen. Of the four, the one market that I did participate in was the NASDAQ. This is right at 9:30, looking for the stocks to break out. Well, unfortunately, the Treasuries broke out as well, and that's what caused the stock market to come down. The NASDAQ actually came down harder than the rest, and we're going to blame this on Apple today, as Apple's been reporting some poor numbers. So as Apple falls, so does the NASDAQ. Stopped and cut the losses at the opposite channel. So again, breaking out. And by the way, I did this not on a 5-minute, but based on a 30-minute time frame. You're going to see the channel, see the 30 based off of a based on a 30-minute time frame. That's a channel up here. It tells me that's where the probability is for the next breakout. Now, I did this earlier, and you might be able to see it here on your screen. Well, this is a triple top is what we've got here. There's a top there. It came up. This is kind of, in my eyes, a 50-50, meaning that 50% chance this is going to come up, top out again. 50% chance this is going to run and break the three tops. Fact of the matter is, it was 9:30 when he had a surge of volume, and just more bears coming in and seeing this as an overbought condition. So result is a loss. We identified this as being a 0.5 to 1% area of risk. You always want to risk less when you get long in that area. All right, the other market that I traded today was in natural gas, so just bear with me as I go climb over and look for it. And there it is right there. Natural gas, we traded this based on it being a -4 quant rank. The macro picture had this trending lower. If you go to the website, you can see that as we do this for all the markets. This is natural gas on our website showing you what the trend has been. And there's natural gas, a -4. That's what the quant rank has looked like the last 40 days. Down, 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 down. And looked like we had a nice little break. Sold 2 here, got one at the 50% mark, came back up, just didn't get that follow through. 9:30 stocks, so you can kind of see what's happened here. Money coming out of the natural gas, probably going over to other markets, currencies, probably the stocks as well, and the money retreating. Market actually went back up to the bear and sold back off, but these yellow candles are telling me that it's neutral. Not a lot of momentum in there, which kept me out of this market to go back in and try to do it again. Of course, the last thing we wanted to do is get whipsawed. So that's the second trade. And the third trade today, I believe, let me just look at my notes here, and I'll pull up the results that will help me. Now these results are going to have one trade in it that does not count for the TradeLAB. That was a trade I did last night in copper. Bear with me for a second. So ignore the copper trade. That was the London trade. I guess that was it. Just the NASDAQ and the natural gas today. So net, as I look at these numbers, what I'm happy about is the fact that it's been a wreck in terms of this picture right here. A lot of sentiment changes. You can see very few ones and twos, and that means you want to keep your trade volume light. We didn't have any opportunities in the gold today. We did have one opportunity in silver, but it was a very short-lived move, and that was pretty much it. Kind of just a choppy session, and damage very, very limited. And look forward to coming in, trying it again, climb in tomorrow morning, and see what opportunities lie in the TradeLAB. See you guys tomorrow morning at 8 o'clock. That's a wrap.
Okay, thanks a lot, EP. It's much appreciated. I think everybody should be able to see my screen now.
Yes, sir. You got it from here? Yeah, we're good to go. Okay. You see it loud and clear. I don't have any subs for you to eyeball, so easy as she goes, steady as she goes, and I'll climb in and see you guys tomorrow morning.
Okay, sounds good.
All right, bud.
See you guys. Take care. All right, so let me ask all of you this. Do you see anything that's enticing? Any setups whatsoever for the second half of the day? I see resistance with the YM. This resistance at the ES. We've got critical resistance right above head. Don't think it makes sense to look for any zone 2 trades in equities, especially with the treasuries moving higher, sitting in conflict. Gold is maintaining a steady price. It's tried to sell off. I'll be curious about the second half of this day and whether we can close into the bullish zone. If we can, I think gold has a shot at a really decent pop to the upside. I was looking at gold earlier. It's pretty much matched the moves. You had a double high here, a double low here. It's basically range bound. You had an area of distribution over the last couple days. Finally gave way, creating some some profit taking off of it, and now has stopped right at our critical support level for the day. I'm going to just keep an eye on the market and see if there is a zone 2 trade a bullish zone trade, a reversal, as you may, right here. So I'm going to keep an eye on that for the remainder of the day. If I can see gold manage to get into the bullish zone, it'll look good to me. There's a lot of work to be done, though. And if we can pop the next stream, that 3 hour is still pretty strong. The next stream 8 hour could change. So everything to me points to range bound in gold unless we can get into the bullish zone. Jim is saying that the Dow chart pattern sure looks like it wants to make an all-time high. Yes, it certainly could, but it may, but for then what? I don't see the odds in a zone 2 trade, not with the treasuries up and the S&P starting to roll back, potentially back below resistances 1A and 1B. So why don't let me just get this to a 5. I want to make sure I watch the gold on a 5. Why don't I ask those of you that have any interest in any other instruments for me to get into? Currencies, you can see, are a big flat nothing. Maybe Euro Yen has some momentum. We could look at that. It's late in the game to do that. NASDAQ is trying to roll over into its bearish zone. See, I could see a short trade in NASDAQ. If the S&P continues to weaken, the laggard right now is the NASDAQ. And I think Dave has told us that it probably has to do with Apple. Apple's off. Mel just told me Apple is off $2.25. See, the thing that I have to take into consideration when even thinking about going short the NASDAQ is what the previous day's low was. I want to see it break that low, don't I? And there's a lot of lows that appear right at that same place. And this looks pretty heavy to me. I don't think I'm going to look at an RQ channel trade when I have the day before's low sitting there right at 66. It's unfortunate, but it is. It's just too much. There's just too much. There's support. I'd rather wait for it to break below the support. So I'm going to keep an eye on gold for the second half of the day. I'd like to see the break in the NASDAQ under its previous day's low. YM is looking like heavy. Natural gas, I haven't even looked at natural gas of late. Yeah, natural gas may be a bearish zone 2 trade. That would be, at very best, I think the best odds. It's beyond the midpoint of the zone, of zone 1. So zone 2 may be appealing. And there's a lot of money in it. There's a $300 spread right there, $340, down from support 1B down to critical support. So that's good. That's pretty decent. It's wider in bear zone 1, but can't do that trade. So these are gonna be my candidates. Natural gas because it's an independent, gold because it's a wild card, and there is a potential bounce coming. Can't do a zone 1 trade in natural gas, and I have to wait for a reversal in gold. I'm going to keep an eye on it because if it does take out this Gnostic level with this congestion right here in London, might see an acceleration. This is what you'd be looking for. See if you can't see a reversal in gold. Gold's been pretty strong of late on the dailies as well, so. Mel says Einstein bought HG. Mel, I didn't know you were working. Are you still working with Einstein? I guess you are. Mel, you're working in simulation, right? So what do you think so far? Mel, what's your comment on it? You want me to unmute you? You can tell us or no? What do you think? Are you still undecided? Okay. All right. So copper. I like that pattern. Mel had just mentioned that Einstein went long. We'll see. about how that does. Now Einstein, we're talking about the gray box, as we call it. Einstein can be manual, and that's what he's referring to as the setting. What setting do you have Einstein on, Mel? I like the pattern. Looks like a flag to me. We shall see. It's also in zone 2, though. I'm almost tempted to buy. Yeah, it looks good. Look at this pattern. Very nice consolidation base over the last 3 days, 3.5 days. That's nice. That's an accumulation pattern. We shall see. Well, we've got copper's next stream is bullish. We've got equities for at least staying steady. So if we could get something steady, we'd be. I think we would. Oh no! What did I just do? What the heck did I just do? Ah. Let me get rid of this. Okay. I just blew away my charts. You know, I'll tell you about Ninja. It's very fickle at times. Let me grab this. Well, we'll see if Einstein pulls out a trade. Mel, what time frame are you long copper? 5-minute chart? He's doing an RQ channel 2 and a 7. Do you have Mel? Do you have the meter running on Einstein with a 2 and a 7, or just the 2? Okay, so you just have the 2 setting. And your risk profile is 2 and 400. It should be 2 and 300. I see what that means. All right, so you're in RQ channel 2. You've got you have a setting at 7 a.m. to 3:30. I get it. That 400 should change to 300. 5-minute, Jim. Yes. All right, so guys, for those of you that are in the room that are maybe a little bit confused, we're talking about Einstein. We're getting more involved with Einstein. We want people to use Einstein within their arsenal. If you feel there is a need for diversification without the stress. I know I use it. I'm working with it, and I'm just trying to get a sense of when I'm going to use it. And I have a feeling I'm going to set it for London. Or I'm going to just use it from 7 a.m. to 11, and I don't know yet. I'm playing with both. Hello, Dave. Dave M. Good to see you in the room. All right, so let me field any other requests. I'm going to keep copper here because I find that pattern very interesting. Very, very interesting. And you know what? They're holding in there. The equities are holding in there. We could see continuation. Just amazing how the treasuries and the equities are moving in the same direction at this point. They kind of decouple every so often within the day, and then they go right back. They connect. And that's what Joe was talking about yesterday and what's been mentioned in Bloomberg now. Joe was way ahead of the curve when he started predicting this in March in his blog. Natural gas is definitely showing distribution. It's going to work lower. I mean, when I say work lower, it looks like it's pointing to support 1A. And you can see total conflict. This is the time you got to look for the independence. There's really nothing. I haven't even looked at dollar Swiss. A wild card can be used. So why don't I do this? Put the dollar Swiss right here and see what that looks like. And there you are. There's a possible setup on a zone 2 trade if there's enough in it. 51 down to 35. That's 16 pips. No, that's not enough. The money is, you can tell that there's more money to be made if we break support 1B. So not really that attractive. Well, you can see clearly it's now 10:55 a.m. There is nothing going on in terms of real strong momentum. Natural gas, yes, right here. That could be a zone 2 trade. It's beyond where we could go short now. Copper, okay, but it's conflict. That's the problem with it. The problem with copper at the moment is which way is the S&P going to go? Where's the treasuries going? I don't think they know where it's going today. You see the S&P's just kind of drifting. On the other hand, the notes have been trending in the morning. Clearly, since 9 anyway, trending up, reversed into the bullish zone. Now we're starting to point in another direction in the S&P with the notes climbing. It's not risk off yet, but you're getting some unwinding where you're selling of equities, unwinding of equities, and buying the treasuries. That makes it tough for copper. It's a risk commodity. It's a very tough call. The thing that I like most about the copper, as I mentioned, is the pattern. This pattern looks good. Blows through support 1A and 1B, comes on back down on a pause to 1A, 1B, and then 1A. That's support. It was resistance. Now it's getting back above resistance 1B, and you have the RQ channel here. My guess is that copper does start moving if we break that RQ channel again. I'm just watching like everybody else. I'm like, and it's not like me, but I'm just mesmerized by the lack of anything. Let's take this, bring it here. That's one that's got at least some strong, momentum, bullish in this case. We've already looked at natural gas. That's moving towards support 1A. I think there may be a zone 2 trade. You have to look for a zone 2 trade anyway. That's the independent. That's the one that is most appealing because we're in conflict. We want to look for an independent instrument. It's not easy to look at euro yen or currencies. Well, for sure, look at the currencies. If there's confusion on interest rate sensitive benchmarks, as in the S&P and the notes, there's going to be real confusion in terms of interest rate differential or thought whether the institution, where the real money wants to flow. And you can see it. It doesn't. It's coming out. It's going in. Euro yen. I haven't even looked at euro yen today. I might as well. Here's dollar Swiss. It's sitting right at the bearish NOS level. And we've got bearish velocity, so maybe a red 5. Dollar yen has already hit its critical. Copper's pointing to it. It's trying. I wouldn't touch it though. Now that I'm looking at what's happening with the S&P, no way. I'm just not going to go long copper, a risk commodity, when the S&P is showing a possible retest of the lower end of the bullish level. Oh yeah, natural gas is taking out lows. That was a real quick trade for 3 points. Yeah, I'd be looking for a zone 2 trade on natural gas today. That I could see. That's the one instrument that looks to me where everything's lining up. I think the quant report's got it neutral though. No, it is bearish. Good. And the downside, natural gas is on it. So everything's lining up. We've got our quant rankings bearish. Price action's moving in the direction of the quant ranking. We've got next stream bearish. All is good. Natural gas, zone 2. You can't go jump the gun right here. Don't do it. Whatever you do, don't do it. All right, I'm going to take any final questions, and if not, I'm going to be taking off. Dave M., would you like me to call you after the lab? Give me a shout so I know where I'm at, or should I email you? Copper is looking good. I agree with you, Jim. I agree. Mel, you are so right. The whole world is, Mel's comment is the whole world is, everybody waiting on the FOMC. You are so right about that. You are so right. Nobody knows whether there's going to be a surprise or not, and it is what it is. It's not easy. This is not. I'll call this FOMC week. Until we get that out of the way, Things are just not. This is the time to lay back and not feel any pressure to manufacture a trade. The natural gas looks very good in zone 2, if it can break into zone 2. Will have taken out a London low, would have taken out this week's low. There's nothing below it that can point to a target outside of what our critical target would be, but you've got to wait. You can't just say, oh, it looks really good, oh, there's a 5, oh, this and that, when you don't have the right, you don't have the price in the right position on the chart, right? Everybody agree with that? Would everybody agree? I guess I'm talking to myself. I know I don't sound, I know I'm not sounding high energy. Hi, Chris M. I know one thing. This thing's pointing lower. Yeah, Jim, that's right, Jim, you did. And I agree with you. Jim and I are almost always on the same page. Zone 2, higher risk, lower position sizing, but zone 2 looks like, if we can get there, would be a good trade for the, second half of the day. Zone 2. Cannot go short, just for those of you that are new in the room, and there's a number of you, can't go short just above support 1A and 1B. That makes no sense. Hello, Gil. Gil is getting primed up. I think you're pump primed already, Gil. You're about ready, right? If you're listening. Hello, Walter. Walter, Mr. Walter P., I'm going to give you a call. I think we owe you at least a coaching session, right? Well, let me email you. We'll make an appointment. All right? I'll look forward to it. I thought you fell off the radar, but you must be busy. Gil, I'm glad to hear that business is being taken care of on your end. That's good. Yeah, there goes the copper. Somebody had mentioned it. Look at this. I love the pattern. The only thing I don't like is the way things are in conflict. But momentum is good. We could step in real lightly, very light. When I say light, meaning low position sizing. But that pattern looks excellent. And I can tell you that it probably measures out yeah, kills me, these measurements. It measures up over $3.30. That's an expectation anyway. Not telling you that's my opinion. It just measures. I follow measurements. I agree with you wholeheartedly. 330, if you're long, 330 is where you get out. Ordinarily, I would actually do this, but I've got people I need to be in contact with, and very busy week. People have been, our members want to thank all of you that have converted RiosQuant to licenses. Anybody that's interested in or wants to know more about it, let me know. We have a conversion where time you've had is equity towards it, all kinds of good stuff. I have an EDU workshop tomorrow on the basics along with RiosQuant. So I'll be doing that from 1 to 2:30 tomorrow. If you want a link, just email me. Here's my email address again. Well, I'm glad to see that everybody is, I mean, from 1 to, who did a trade, yes or no? Yes, you did, and was it profitable? So 2 yeses or a yes and a no. If you didn't trade, just say no. Jim traded. I don't know how to use the polling thing yet, but Mel says yes, yes, no, yes. Well, okay, that's 2 out of 3. Oh, no, that's 3 out of 4. Jose traded the euro. Excellent. Did you make money? He did. Excellent. How many pips did you gain? How many points did you score? I look at everything here as a video game. Oh, you started in the London session. Well, that's cool. It's time for you to go to sleep. Jose got 50 pips. Outstanding. 20 and then a 30, so there were 2 trades. Outstanding. Were they RQ channel trades or were they Gnostic or both? Well, I can tell you this is an RQ channel trade right here. This is the breakout on copper. They were both Gnostic. Nice. Let's take a look before I leave. Jose, you got 20 pips out of that sucker. And then 30. Oh, I see what you did. You sold one of these 5s? Oh, you had a, I see what you did. Yep, I got it. So you scaled down. You trailed and ended up with 20 and then 30. Yep. Beautiful. All right. Jose, this is what London Trinity can do for you, and our indicators, well, they speak for themselves, but good work, Jose. Good work. He caught X amount of pips, and I don't care which, right about here, midway, and then he took the remainder, he trailed the stop and took the remainder down. Perfect. And then look, stops on a dime right at support 1A, 1B, and now, boom, totally changed. Total. Now, I wouldn't try to go long at this point. It's too late in the day. It's anywhere to go long, it's zone 2. Here's a 5 that's failed. It's not worth it because price action's in conflict now. Oh, you came out and then, all right, so you actually had 3 increments going. Well, very good. Guys, I want to thank you very much. Enjoy the rest of the day. And I will be in touch. Take care, guys. Bye-bye now.